Things got a little fiery on The View again, and this time it was Sunny Hostin stirring up the pot with a bold legal claim. While discussing the recent roller coaster movements in the stock market, Hostin didn't mince words. She thinks former President Donald Trump should, certainly, be guilty of insider trading. Now, if that made your ears perk up, you're not alone. The comment came in response to Trump's all-caps post on Truth Social where he told followers, "This is a great time to buy," referring to the stock market. On the surface, it sounds like typical Trump bravado, but Hostin, who happens to be a former federal prosecutor, took it much more seriously. According to Hostin, that kind of public statement isn't just noise. It could be seen as a signal to wealthy investors who have the power to take advantage of short-term dips. And if someone in Trump's circle knew about a pending economic policy shift that would cause a market rebound, well, that's pretty textbook insider trading in her eyes. She laid it out clearly. Using privileged, non-public information to profit off the stock market is exactly what gets people in legal trouble. And in any other scenario, if the person wasn't named Donald Trump, it might just trigger a full-blown SEC investigation. Still, there's a catch. While Democrats have already started calling for an investigation into the post, Hostin was pretty realistic about the chances of accountability. She voiced her skepticism that anything would actually come of it. After all, this isn't the first time Trump has posted something controversial online, and consequences have been, at best, inconsistent. She doubled down, though, stating plainly that if anyone else had done what Trump did, hinting at a market rebound while holding inside knowledge of a policy shift, it would be game over. Legal teams would be all over it. Not everyone at the table agreed. Co-host Alyssa Farah Griffin chimed in with a different take, suggesting that Trump may not have had a grand strategy in mind. In her view, his post wasn't necessarily part of a calculated move, but more like his usual impulsive, stream-of-consciousness messaging. And let's face it, Trump's social media history is full of bombastic claims and late-night rants, so maybe there's something to that argument. Still, Hostin's take raises an interesting question about how we hold public figures accountable for market-moving statements. When someone with that level of influence publicly declares it's a great time to buy, and then a major policy change follows, is that coincidence? Or something more deliberate? And even if it's not technically insider trading, shouldn't there be more guardrails in place when politicians are playing with market confidence? In the end, this debate is more than just legal jargon or partisan bickering. It speaks to a larger issue. How do we handle the power that public figures have over financial systems? Should there be stricter rules for what former presidents can say about the market? And can we really expect regulatory bodies to step in when politics are involved? One thing's for sure. If this post had come from a CEO or a hedge fund manager, the headlines might be looking a lot different right now. So whether you agree with Hostin or side with Griffin, there's no denying that Trump's social media antics continue to blur the line between political showmanship and potential legal landmines. And as we move deeper into an election season, expect more of these fiery conversations, not just on The View, but across the country.